Ratnesh Kumar, MD and CEO BOB Capital Markets, is with us on the show. Good morning, Ratnesh. And, we have voices talking about how the global crisis could lead to a major blowout for global economies. And, on the other hand, you do have the overall macro situation, which seems to be fairly okay. Crude oil prices are in our favor. What do you think is going to be the road ahead for our markets?
So, considering you started on the global set, it's not a global crisis, is what I would call it. I think what you're seeing is growth slowdown, which is happening in multiple different geographies, be it China or even the US, as well as Japan, etc. So, and at the same time, you also have oil coming down. So, I think the takeaway for our market from that perspective has to be that as globally some of the growth engines cool off, China already cooled off a while back, and the US is also cooling off. One thing is for sure that I think the interest rates will be headed lower if you look at on a 12-month basis or 6-month basis. And that has to be actually positive for equities, and more specifically with oil also being weak. On the macro front, it is naturally positive for India as well. And if the global rates are headed down, then it also gives a little bit more leeway for our economic managers to probably look at some element of stimulus, even if that is at a small cost of the fiscal deficit, to get the growth going locally.
Right. Ratnesh, just 2 days and then we'll have the union budget. This time around, it's going to be a tightrope walk. You don't know how the government plans to, or whether it intends to actually instill growth. And would that be at the cost of, a burden on the fisc, considering that there is a very small elbow room to do that? What do you think is going to be those key 3 things that the government may look at this time to try and instill growth, which has been grappling for a while?
Yeah. So one thing which will be, there will be efforts made to try and kickstart the whole investments. I think the government sector has already been investing, and that will continue, be it in the infrastructure or the other sectors. But the real key, critical part is how to get the private sector investments going. And in that regard, I think interest rates will keep coming down, and that's probably that's not got much to do with the budget, except for the fact that fiscal deficit has to be within the management limits. But in terms of kickstarting growth, one of the real driver has to be how the private sector investment can be sort of brought back. And that is what the focus should be. And secondly, also you've had fairly significant dislocation which has come into the economy from the NBFC problems which we have been seeing. So if anything is done with that regard, that will also be helpful for growth in the economy, because already you have seen the impact of NBFC on some of the sectors like autos. It has been fairly significant on the negative side. So any sort of positive steps in that direction, that will also be helpful.
Right. Ratnesh, do you think banking consolidation is something that would also be top of the agenda for the government? This is something which is being talked about. You also highlighted, maybe privatization is one way to garner revenues. But banking consolidation, do you think finally there will be some material plan which could be laid out, and maybe something to the extent of PSU Bank recapitalization as well, which could be talked about this budget?
So recapitalization was done last financial year. You saw, that was fairly a significant amount of recapitalization, and the consolidation also first steps, were taken last financial year. And broadly, I think the policymakers have already stated that is the long-term direction which they see. And I think that you will continue to see movement towards that. But I think that is nothing which is likely to be so much part of the budget initiative in terms of for budget to drive to get the growth going back in the economy. I think the animal spirits need to come back in terms of optimism, in terms of growth enthusiasm. And one of the places where you can get the animal spirits sort of visible and impacting broader economy is the equities. And so I think some positive steps towards equities, especially since as you can see all around debt. Debt is a big overhang in a lot of sectors, lot of segments of the economy. So equity market, be it in terms of relaxation in long-term capital gains tax, how much money is collected from there. But equity is important. Equity is very, very important at this stage of our economy as sectors need to be deleveraged. And that's sort of a pump priming for equity, for driving animal spirits, for raising more equity capital. I think that can be really helpful for the economy at not too much cost.
Okay, fair enough. Let's talk in detail about the banking sector then. You did draw upon the fact that the overall crisis within the NBFC space has now led money to flow within more of the private banking names. But a trend that we've observed is that there's leadership or there's, quality returns coming in only from the select few, a handful, if you will. How are you reading into that trend, and how are you looking at, an overall catch-up play within the overall retail and corporate banking space?
So first up, it is, I firmly believe that the banks will lead the market from here on. If you look at the earnings growth recovery also, which is being foreseen in the current fiscal year, about 18% or thereabouts, more than half of that is supposed to be coming from the banking sector. Naturally, banking sector is coming from a low base, and that is contributing to more of their share in the incremental profit growth. But bottom line is, for the banking sector as a whole, I think the provisioning and the NPL cycle have peaked and or bottom, whichever way you look at it, and so the worst is over in that sense, and provisioning requirements keep coming down. And to that extent, the market will continue to reward healthy banks, both on the retail side as well as on the corporate side. They will have enough growth opportunities, and especially with the NBFC sector still sort of taking some time to get out of the fix which it is in. I don't think there are any limitation on the growth opportunities for strong banks, and that is why I think banks will be the leader sector for the market over the next 12 to 18 months.
All right, Ratnesh, lovely having you on board. Thanks much for taking time out with your outlook on the markets as well as the banking space as a whole. For now, it's time for a short break. Stay with us. We get you more technical topics.